name is John Rowland, Barchart's Head of Trading Education. Welcome back to another episode of Rowland's Trading Roundup, where you can better learn about the features and tools that Barchart has to offer. If you're new here, hit the subscribe button to get alerted anytime we upload a new video. Before we jump in, please take a moment to pause the video and read this important disclaimer in full. Any decision to buy, sell, hold, or trade any investment involves risk and are best made on the advice of a qualified financial professional. In recent days, there's been a lot of talk about cyber attacks in conjunction with the conflict in Europe. And many investors are looking for opportunities in cybersecurities because it is news that is right in front of their face. Now, could their emotion be taking over instead of logic? So before we look for opportunities in the cybersecurity sector, let's take a moment to look at the backdrop of the broader market. What we're looking here is at the Qs, the Nasdaq ETF, and knowing that the Qs is heavily weighted technology ETF, and our cyber stocks certainly would fall into that category. So we can see that since the beginning of the year, that the Qs have been in this precipitous drop, and that we're currently in a well-defined downtrend. So how do we define a downtrend? Well, it's a series of lower highs and lower lows. Now, not only has the Q been in a downtrend, but by many technicians' standards, we are in a bear market. And this is also confirmed by two aspects. First, that our price action from our recent all-time high to this low is more than 20%. That is a classical term for a bear market. The other aspect is that price is now currently below our 200-day moving average, is what is represented here by this black line. Now, one of the characteristics of bear markets is something called a bear market rally, or sometimes referred to as a relief rally. And those tend to be very swift and short-lived. You can see that from this low, we've rallied a 10% correction. Could this be the beginning of a new bull uptrend? Maybe. But typically, uptrends and bull markets rise in a more gradual manner. And if many of you might have heard the expression that bulls take the stairs. Now, on the floor, we used to say the strongest of bull markets never convince you to buy them. So they just kind of gradually crawl up. And if we defined a bull market, well, that is defined by a series of higher highs and higher lows. And none of those two characteristics have been satisfied right now. So that's the broader market. This is the ETF HACK, a cybersecurity ETF. And this ETF contains a numerous amount of technology and software companies that are in the cybersecurity business. And some of the names you might recognize: Cisco, Palo Alto, Norton LifeLock, Splunk, and Jupiter Networks, just to name a few. But if we return to our chart, you'll notice that we have a similar price pattern that we saw with the Qs, but there's two main distinctions here. Notice that our rally here from our low is of 17%. And HACK has also made a new higher high. But not until we actually make a new higher low can we confirm a possible new uptrend. But let's see if we can look at some more things to this price action that allow our bulls to hang their hat. What we're looking at here now is two technical aspects or technical analysis. One is our relative strength index. The other is a MACD. So let's look at the relative strength index first. One of the things that we can notice is as our market was making that new low, our RSI was getting into the oversold position. And this usually is an indication that price will reverse. And we did get that price reversal. But then price went back down and made a new low. But notice that our RSI did not. As a matter of fact, we have a higher low, just like in a bull trend. And this is called a positive divergence. This is a true technical indicator of a potential trend reversal. Now notice back here when we made this low and we got into the oversold position, and yet when price went and made this low, we did make a new lower low in our RSI. Again, a confirmation that this trend is going to continue. But if we also look at our MACD, notice that we see the same as we saw with our RSI, a positive divergence. And matter of fact, as we were making this low here, our MACD was moving from a negative in our histograms to a positive. And currently, our fast-moving moving average is in positive territory. Another sign that the market is telling us that the momentum is to the upside. But I also believe that it's important for us as traders to take a moment to look at the markets from different perspectives. One of them can be candlestick formations. And you can see that for today, this price action, this red candle, is engulfing this last 2 days. Now that in candlestick theory, that is a bearish indication. Another way we can look at our market is just by changing our chart. For those of us who are Elliott wave theorists, what do we see? Do we see a 1, 2, 3, 4, 5 wave completion? And now what are we seeing? Well, could this be the A, B, C of our correction wave? So for day traders, for swing traders, there is definitely a possibility for the market to have a lot more price momentum. But for our long-term investors, if you want to invest in this particular ETF, you now know what your risk is. This significant low where we had that positive divergence. But for many long-term investors, the deal breaker is that price below the 200-day moving average is a no-go. And that maybe prudence and patience should outweigh emotion and FOMO. I hope this video was informative. If you enjoyed today's content, make sure you subscribe to our channel and give this video a thumbs up. Until next time, the good of all trading.